Welcome to the weekly wrap-up, where we take a look at what economic events were moving and shaking the markets this week. Today I'm joined on the line by Merina Willemse, economist at Efficient Group. Merina, what do you think were the major data releases impacting the markets this week?
Well, I think the most important ones during the week was the numbers from America. So firstly, we saw some information about consumer confidence improving. Their economic growth number on Thursday really made an impact. Even though it's a little bit weaker, at least there was still some significant growth coming from America, and as well as the home sales figures. I think at the moment the whole world is looking at American numbers and really considering whether there will be continued stimulus in the months to come.
And what did you think of the US consumer confidence figures for May released on Tuesday? And what signals does this send to the markets about the US economy?
Well, I think at least you're seeing significant strengthening in these numbers. Over the past few months, it's been consistent in terms of confidence coming back to that market. And at the moment, at least it's telling us that this market is remaining buoyant under the current low demand economic circumstances. But then again, at the same time, while we're seeing good numbers coming out of America, the markets all over the world starting to get nervous that there might be a retraction of stimulus from the Federal Reserve Bank in America. So again, maybe positive numbers is a good thing. We need that. We need the economy to survive and recover. But then again, when at the moment the stimulus is withdrawn from this market, I'm sure investors are going to start being very nervous, and we're probably going to see very choppy markets in that type of situation.
On Wednesday, data showed German unemployment in May rose more than 4 times than initially expected, with the number out of work rising to 2.96 million. Is this negative data for the Eurozone's so-called growth engine worrying for markets and investors?
Well, first of all, I find the data on Germany's unemployment a little bit difficult to always really grasp and really to draw out the signals from that. The unemployment rate remained similar than the previous month at 6.9%, and this is mostly a lot of seasonal factors that contributed to that. When you look at the actual number of unemployment people changing as significantly as they've done in this last month, it really tells you that maybe the unemployment number is not really ringing true to the actual situation going on in Germany at the moment, the actual economic situation. And it's possible that investors will be worried that this might weaken in the months to come. So we're really going to be watching Germany's unemployment and other related economic indicators very closely in the months to come and see, even though this country is showing a much healthier economic numbers than some of the other countries in the European Union, we really need Germany to stay strong and to continue to grow and improve as the months go by, to really keep the whole Eurozone in part of its territory.
Also on Wednesday, the Canadian Central Bank left interest rates unchanged at 1%. Why do you think this was, and how do you think this will affect their economy and markets going forward?
Well, I must say, I think it's interesting to see that Canada's keeping their rate at 1, especially when we're seeing a little bit of inflation pressure perhaps subsiding in Canada. We'll have to wait and see if pressure comes back in the months to come. But then again, I think what's obvious is that the governor of that Reserve Bank really believes that the current low rate of the interest rate is already very stimulating to that economy, and that it is functioning well at this level. It's going to be interesting to see how the new person that comes into office is really going to handle the situation, and if there will be policy amendments when a new governor is in command there.
Yesterday, the US economy grew at 2.4%, less than expected, and dropped from 2.5%. And applications for jobless benefits increased 10,000 to 354,000, week ending May 25th. Do you think this will be a big concern for the Federal Reserve, who are debating on tapering back their bond buying program as early as June?
Well, I think there's been lots of things happening in the American economy in the beginning of this year. They had, the sequester coming up, the fiscal situation contributing to a little bit slower growth in the first quarter. Lots of things happening that's probably affecting the way that economies developing in terms of its economics, how things are actually playing out. And I do think these numbers are not only watched by the American Federal Reserve, but every other central bank in the world. And everybody's really looking towards the recovery being a good thing, but also a bad thing in terms of the stimulus that the Federal Reserve is giving that economy at the moment. So it might be a little bit early still to really understand exactly how the Federal Reserve Bank of America will play this out in the next few months to come. And we'll certainly keep a lookout on further U.S. economic data points in the months to come.
And lastly, Eurozone Consumer Price Index for May rose to 1.2% today, and Eurozone unemployment remained at 12.2%. What signals do you think this will send to markets in terms of investor confidence?
I think it's very significant to note that numbers in the Eurozone are deteriorating somewhat. It's very disappointing to know that there's an incredible stimulus coming from the ECB at the moment, and the statistics aren't really playing along like we're seeing in the American economy at the moment. So again, it's really just a situation of, I think the ECB is already doing everything in their power to try and give the market as much stimulus as possible to improve these figures. But it might take a bit longer until we start seeing the results from the stimulus. And we're obviously not seeing an improvement in the Eurozone as a region at the moment.
That's all for now, but join us on Monday for the week ahead to see what events could move the markets next week. Have a great weekend and bye for now.